What up, everybody? Welcome to another beautiful class here at BT SMC. I got a lot to talk about because the market is at a very interesting spot. But first, we're gonna start with last week. This is the week of I'm recording this on November 17th. So we're gonna talk about last week's price action going into Friday, actually, just the most recent day, because this is last week, right? This pretty much sums up last week. This is the 4 hour chart. This is what price action will look like headed into Friday, and you can see that it was very uneventful. It wasn't much to talk about. The market consolidated until it didn't. Friday was a pretty big drop, so I want to go through this price action, but just kind of let me explain to you guys why I was saying to you that price has to use this hourly BIST to go higher, otherwise we're gonna have a big drop. That was literally last week's plan. If you go back to the recording, um, either the recording or the free community itself, it's somewhere on document where I'm telling everybody, yo, the plan this week, I want price to, oh, I said it in the free community. I said I want price to come into this hourly BIST to go higher. And that's the bull case. If it does not use this hourly BIST, we're gonna have a big drop to the downside. And so let's watch it all play out. Obviously, it consolidated here for quite some time. Once it fell through, we're officially in our bearish plan. So one thing I'll do in this 4 hour is, man, I don't know if my mentees are willing to come off mute. Any mentee willing to come off mute? I don't know. If we lose this area right here, right, without getting too much into detail, mentee, just kind of tell me where you would think is just a first stop real quick. Doesn't mean it's the ultimate destination. Where would the first stop be? Just looking at this 4 hour right here, where would the first stop be? Anybody? If you come off mute, maybe type it somehow. Anybody, if you're mentee. If you're not, you can also say it too. I wouldn't go. So a couple people that's not quite my mentees yet, but they will be, said discount fair value gap. I wouldn't quite say that just yet. But eventually I see 20,600. Yeah, so everybody's kind of going into the discount. I wouldn't quite say that yet. 20,800. There we go. Yep. So my mentees is coming in with the 20,800. Good. Correct. Ash Cash, that's what's up. Miss N, that's what's up. Katrina, yep. So my mentee is right. Automatically, we already know we're targeting this inefficiency right here. That's the minimum. And they're really getting this from the BT4 process that I teach, which is a concept that I constructed on my own that I teach my mentees early in the mentorship, and then we work with it all semester. So, this is a first stop. That's why I was telling everybody that price could go higher from here. Price technically could have gone higher from here if we were bullish. After this, we know automatically we're coming down here. So I'm putting these areas on the chart on purpose so that you guys know we have context. When we're trading the lower time frames, we have context on where price is going. So right now, just think of it like this. We're looking at this on the 4 hours. So even between this purple area and the area below, this is still a good, 150 plus points. So there's a lot of money to be made in between here. That's 1 point. Also between here and here, there's definitely a lot of money to be made because this is going from let's say 850-ish to, yeah, bro, this is 400 points, y'all. So just know, think about it like this. Like, even if you wanted to be patient, you could tell yourself, yo, I'm gonna wait to see if we invalidate this area. Because I'm telling you right now, there is nothing that would have stopped price from going from under here to right here. Like, nothing in the middle here. There's nothing in the middle here that would have made price bounce. So that's the beauty about understanding like objectives in the market, is that you already know the destinations price has to go to. This is one destination, hence why I told you guys that since actually Friday, which Friday was that? Friday, November 8th. Friday, November 8th, I told you guys the market has to come back to this hourly busy. And then we watched the whole week. It consolidated at first, but eventually, lo and behold, it gets there, right? Cool. So if we bullish, we will go higher from there. But if we not, next destination. If we not, next destination. Okay, so let's see how that looks like on the lower time frames. On the lowers. You first of all look at the hourly. You think this was fun to trade in real life? I think this was fun. This is not fun. This was not fun. All right, but now we start to break down overnight actually. So you see, this is the last candle of that day. Now we starting to break down. Cool. So now that we lost this area, we really know, even if you wanted to trade overnight price action, it's literally from here to here is easy money off the rip. Easy money. But I want to take it to New York, the New York session. So, but one thing I will say is, look how we losing this area during London. This is the London session. Cool. So we already know we're losing this area. My fault. I guess it's bouncing at first. I guess we lost it during New York. I'm trying to remember because obviously, as I told you guys, I was traveling. So this is 8 a.m. That's 8 a.m. candle. So obviously, it gave us a little bit of a bounce, but it's not holding. So now I want to go to the lower time frames. Let's see. So okay, I see it started consolidating this area. What I would do in the area where it's consolidating is I would draw a line at the low of that consolidation. Why? Because to me, price is probably gonna go lower. Can I zoom out for a second and remind y'all? See something, 855, perfect. Can I remind you guys what the plan was? We said, yo, if price loses the hourly BISI, we're gonna have a big drop in the market. This is a conservative target. That's not where I have price going. Otherwise, I would have told you that in the chat. If it's not this hourly BISI, we're gonna have a big drop in the market. So price gets here. And yeah, we got a little reaction, but obviously it's not giving the energy that it needs to propel price to the upside. Why? We didn't even expect that in the first place. This was not the area we wanted to be the low of the day. It's just more so a solid destination. I mean, even from here to here, this is the 5-minute time frame. Even from here to here is literally good money to be made at the end of the day. So this is a conservative target, but I would, like I said, look at how price reacts under these lows. Because I know the market is going lower, you don't have to trade the chop, and I don't advise trading chop. I don't advise trading consolidation. You can kind of wait for your moment. Look at this candle here at 8:30. That I think retail sales came out. Now that I remember. So you also have a news event going on. Don't trade this. Don't trade this. That's how you blow accounts typically. All right, just wait on your moment. All right, so price starts to break down here at 9:15. When we leave consolidation, we like to leave it with what? A fair value gap. When we leave consolidation, we like to leave it with a fair value gap. That's a concept we talk about over and over and over that I talk about for the free ski that I think has helped a lot of people out. I know it has because of the messages that I get on the back end. So I'm glad to see that it's been helping you guys deal with consolidation areas and knowing what a true breakout is versus a breakout you might not want to participate in. You know, so we leave one with a fair value gap here. Cool. Everything looks good. This is 925. And we love when we don't come back to this. We love when we don't come back to that first fair value gap. Oh my gosh. That means price is on a mission and y'all already know where it could go. So this here would be really nice if we don't come back to that. This is the 925. Let's go to 30 right there. All right, so what I'm gonna do here is I'm going to go to the 1-minute time frame. But what I want to mark off is the low of this candle from 925. The reason I'm doing that is because if we could create a fair value gap right here, we may want to use that area in the future because we love the fair value gaps that get created immediately once the market opens. There's a concept called the first fair value gap, the first presented fair value gap. That's something that ICT has actually talked about. And I like that concept. I've looked into it, and a lot of times it is a solid area to look at, which is once again the first fair value that's presented in the day. So right now, knowing where this yellow line is could show you where the first fair value gap will be. All right. So what are we doing? Oh yeah, let's go to the 1 minute now. 34, 35. Oh, they acting. Please tell me, Trevor, you're not about to act funny. Oh, they doing that thing again. I might have to. What happened? They did this last time to me. What I have to do? Refresh my screen again. I think I gotta refresh the screen. Let's see how this go. Cause they not about to play with me today. Freaking trading view, bro. Messing up the back test. What's up with them? What is this? 9:15. 9:25. We got that candle, and we trying to come to the 1 minute. And then, all right, there we go. Okay, so my thing is, I'm looking to see if we could create this fair value gap. So actually, it'd probably be easier to just go to the 5 real quick and see. All right, we made this fair value gap right here. The first fair value gap on the I like the first 5-minute fair value gap if we're able to get one, because if price comes back to that, it'll tell you a lot based on how we react to it. If we trade past it, you may start to see higher prices. If we reject on it, that's giving you indication that we may want to stay bearish. So, and yeah, lady, cuz I keep forgetting to use the app, but it's working now, so we should be good. But this is a 5-minute fair value gap that we finna have in price action. So let's see, when the market opens, it starts to go really bearish, and then we created this fair value gap. So this is the start of a new 5-minute candle. Let me make you understand what I'm saying here, right? This green candle that just opened up is 940, meaning we're just now starting a new 5-minute candle. Okay, so but we do have this area right here. We do have this 5-minute bearish fair value gap, which means that's an area that we could use to either take us lower if we need to, or if we trade past it, that's telling you a lot about price action. That may tell us that we're going to be bullish for a while and gonna have a deep retracement in the market. And so my point in bringing this area up to y'all is that you want to look at the first presented fair value gap. It could tell you a lot about what could happen next, or in the short term in the market. So let's see. 42. Oh, did I mark? Let me just make sure I didn't mark the wrong one. No, I didn't. Just making sure. Okay, so anyways, that's 43. Price is dropping off. Cool. You may like the fact that it reacted to this 1-minute fair value gap. That's good. We made a lower low. It's not a good sign for continuation, right? Because you want to see price accelerate past these lows, not come back into the range. It may be somewhat of a sweep right now. Lo and behold, it ends up being a sweep. Price ends up coming back up into a premium of this 1-minute range, but it's cool. It's cool. We not tripping. All right. So there you go. Price pushes back up into this area. This area should tell us a lot about price action. So what I would look for in this area personally is I want to see if when we hit this area, we could start to make 30-second bearish fair value gaps. Why? Because this is a 5-minute point of interest. This purple area is a 5-minute point of interest, a 5-minute PD rate. And so if we touch that area and then we start to make 30-second bearish fair value gaps, that's a good sign that this is a valid PD array. Doesn't mean you have to trade off of those 30-second fair value gaps. Understand what I'm saying? But if you start to see them form, at least it's some confirmation for you. Like, yeah, I like the PD array I chose. This is a good area. So you don't have to enter the trade yet, because remember, there's a lot of room between here right now and this purple area. A whole lot of room. You don't have to snipe the top every time. I'm trying to tell y'all. You don't have to catch this tick. You could wait to see, oh shoot, price really break it down. Cool. I like what I'm seeing here. I'm gonna take my shot at it, and I know price is going down here, especially if you trade options. Especially if you trade options, this is even easier for you. And I know I got new people in here, so maybe you haven't heard me say, but even if you trade options, I still suggest that you trade futures ticker. My fault, that you chart on the futures ticker, because this is still the QQQ. If I go to QQQ right now and I look at what price looked like, at 9:50 a.m., it's gonna look the exact same way, because this is still the NASDAQ. So yes, you can chart on QQQ, or you could just chart on the NASDAQ. And I think you should chart on NQ, which is the futures version of it, because you get more information. You get to see what was transpiring overnight. You get to see fair value gaps that were made overnight. You get to see whatever liquidity you could target from overnight, et cetera, et cetera. So it's so much more information, but it's the same chart technically. And so, anyway. All right. So if we're bullish, you would want to see price bodies hold this bullish fair value gap. So now it's a matter of, okay, if we're bullish, we should be reacting to bullish PD arrays, such as this 30-second fair value gap that I just highlighted. Let me actually type it in. People are visual. So let's say 30-second BISI. A BISI is a bullish fair value gap, everybody. A BISI is a bullish fair value gap. So let's see. This is going up against a 5-minute bearish fair value gap. Let's see how that goes. All right, bodies are holding it so far. Okay, it's going well. So are you in the trade yet? I'm not in the trade. I don't know about y'all. I'm not in the trade. I haven't gotten confirmation yet. And this is why it's good to wait for confirmation. So this basically worked out and brought us to the previous highs. But technically, we're still inside of this bearish PD rate. And so I'm not involved yet. Okay, we breaking back down. Now it's likely that we're going to run these lows here. Okay, so now you see we're able to create a 30-second bearish fair value gap. Doesn't mean you have to hop into the trade right now. It does not mean that. So let's rate that, by the way, 30-second SIBI. A SIBI is a bearish fair value gap. Cool. So we made one. Doesn't mean you have to hop into the trade, but that's at least it's a good sign for you. You might say, you know what? I want to see it, come this deep into the range before I go short. That's fine. That's okay. But I'm telling you that there's room for you to take a trade right here and have your stop loss either above the fair value gap that was created or above the highs. Either one. This becomes preference here on how you want to do this. Okay, but there's room for you to do that. Do you go after the high or low swing point? After the high or low swing point. I don't know what you mean by do you go. Do you mean do I enter? Like, not sure what you mean. Or do I go? And yeah, I typically, so the question said, do I trade the 1 minute? Anjane, I already handled that question, but just for anybody else that didn't see it, I trade off the 15-second a lot for my entries, but I watch all time frames. That's the thing. Like, everything I do is based on a higher time frame, and I'm working my way down. So I want you guys to notice what we've done before this back test. Remember that I started y'all out on the 4 hour. I really could have took you to a higher time frame, but for this, I started you guys off on the 4 hour, and I give you context. So this is a major point, and I'm glad that question was asked. So that's why I love questions, because they help me get everybody on the same page. So remember, we had this area up top, and we say, yo, if we lose this area, we're going down here. So just think about it. I already know I have a direction on price. So any little rally that happens in price action, such as this rally, what did you guys see me do? Draw out a bearish PD rate, such as that 5-minute SIBI. Because if we're going up, that's the fake direction. Anytime we're going up, it's to reject on something, so we could go lower. And if we go lower again and you see us going up, guess what we're gonna do? We about to reject on something in this price leg to go lower. That's gonna continue on and on and on until we get to this destination. Once we get here, it's free game. It's free game. At that point, we can have a deep retracement, we can have a reversal, whatever it is, because this is also a bullish POI. That's a spot that we actually could bounce from the 4 hour. But when you learn objectives, especially if you join a mentorship, you could learn the BT4 strategy. You'll learn that, like, it's like almost mandatory that once we lose this purple area, we're like, I can't say 100%, but like 99% going from it. There's purple up top all the way down here, 400 points away. It is almost guaranteed. It's like the BT4 strategy is golden. It's the heartbeat of the mentorship right there. And so any little like rally, you don't even believe in it. And anybody, I know, like I said, people are new in here. Anybody who's been with me for multiple months now, you guys have seen the level of precision that I've been putting out. Like a lot of times, if I say something's gonna happen in the market, it plays out, right? Where do you think I'm pulling that from? That's the BT4 strategy typically that lets me know what should be happening next in the market at any given time. And so, no, I'm not perfect, but like we pretty freaking accurate, to be humble, for real. So I say that to say it makes trading a lot easier when you know where price is going, so you know what to believe in. Is this a real rally? Is this a fake? Is this a fake breakout? It really frames a lot of your trades, but notice that it's all coming from a higher time frame. So by the time I get to the lowers, for me to take, for example, a 30-second time frame entry, it's still in context of the 4 hour direction. Understand me? It's all these is working together. I picked a 5-minute PD array. I'm using a 30-second to confirm it. In real life, I probably get in using a 15-second more than a 30, but you understand? So it all come together. All right. And I appreciate you, Post Ma. You said unmatched. Appreciate that. Pretty accurate is very humble, bro. Mostly accurate is more likely. I appreciate you, Tiffany. Yeah, it's been pretty solid so far. So let's keep it going. And all right, so we're starting to break down here. We love the fact that we didn't come back to this 30-second BTC. I always tell you guys, like, if we make a fair value gap and we don't come back to it and it's going in your direction, that's a good sign. You like that. You would like to see that. Another thing I told you guys is, man, this is getting a little noisy. I hate noisy charts, but I want to show you guys. Remember I said, like, if we're trying to lose these lows, you see this green candle? This green candle could have taken us back to the upside, but notice that it didn't, and we came back to these lows. There's a room to enter right here with a stop loss above this green candle. I gave you guys that setup as well for free many weeks ago. So if you didn't get the entry that I took here and you got in down here instead, and you had a stop loss above this green candle, that's also not a bad try. I wouldn't be mad at that. Or maybe you still put it above the fair value gap. However you look at it, none of that is bad. And why is that? Let me reteach that for a second. Because price is pretty much ranging right here. We made a high, we made a low, we made a high, we came back to this low. We're ranging right here. This green candle could have taken us back to these highs, but notice that it stopped right there. Okay. For us to come back under these lows shows that we may have a bearish intent right now. And so if we're going to do that, we need to maintain that. We need to maintain this bearish intent. You don't want to, if price were to come back up here, you're probably wrong. And I always say, keep your losses small. It's okay to be wrong. I'm not afraid to be wrong when I trade. That's one thing I'll never be afraid to be. Shoot, my whole life been a risk anyways. So you can't be afraid to be wrong, especially if you're sized correctly. And if you're taking trades that you've seen play out time and time again. So if you took your shot at this low, stop loss above these green highs, you're risking such a small amount of money. This is a 30-second time frame, mind you. If you can't risk this, you're oversized. If you're not allowed to risk this, you are oversized on your trade. I'll tell you right now. All right. So let's see. All right, we starting to break down. And maybe I could show that too on a 15-second. Let's see. I probably need a lower time frame. This is Friday. Let's see if I go to the 5. Oh, whoa. Chill out. Let's go to the, let me see if I can show this on a 5-second. Price is fractal. You're like, why is he going to the 5-second time frame? I'm going to a 5-second time frame because what happens on a 5-second happens on a 5-minute, which happens on a 15-minute, which happens on the 1 hour, which happens on a 4 hour, which happens on a weekly. Every time frame does the same thing. When y'all understand that, it's a real blessing on your trading journey. I'll tell you that. So think of it like this. I'm honing in that area where I told you guys that entry setup. Look at what's transpiring right here on the 5-second. Notice that we have a high put into the market. We have a low put into the market. For us to not break back above these highs and then make a lower low here, even if you trade market structure, which I don't trade traditional market structure, but even if you trade market structure and you want to see it in this light, you don't want to see price come down here and make it all the way back past these highs, because that's showing you that you're probably on the wrong side of the market. You understand what I'm saying? So I just showed you the 5-second breakdown on why that setup tends to work when you're in the right direction. So let's go back to the 30-second to remind you, because I want to make sure y'all understand this. I'm not just trying to leave you. I'm not just trying to say things just to have you hear my voice. I want y'all to understand it for real. So remember, we were in a range right here, right? Boom, ranging. If we were ready to make a low, we would go right away. But nope, we made a green candle. Dang, why they put that green candle on the market? That's frustrating. I guess we still in a range. They faked you out. No, we not still in a range. We started to break down. Dang, okay, I guess we going. There's room to take a trade here with a stop loss above that green candle. Why could you do that? Because of what I showed you in the 5-second in that same area. See? You don't want to come back above these highs. So if we start to break down how we did and then we come back above those highs after the fact, you should be worried. Like, you're probably on the wrong side. So I would cut that trade. I'd be like, never mind. I guess I'm wrong. But if we break down, oh yeah, we need to just go. We need to just go for real. And you see it all playing out here in the 5-second. It's all playing, everything doing it's supposed to. All right, now, hopefully that was clear. That's why that works out. All right, so we want to continue to break. Let's go back to the 1 minute. We end the trade, right? So let's get back to the 1 minute joint. All right, I mean, prices breaking down. You literally don't have a reason to sell this trade right now. Like, there's nothing that should be telling you to sell it. I personally wouldn't want to see price come back all up in the hair, but you could always go break even at this point. Let's say you put your stop like right there, something like that. But I would want to see price just maintain this downtrend. I mean, good money is already made here. You're up at this point. You're up 70 points, 70 points at this point. So cool, prices breaking down, things looking good. You literally have zero reason to sell. I'm on the 1 minute, mind you. These are not big retracements. This is the 1 minute. So look how that one entry, based on the first fair value gap that was presented in price, based on the first fair value gap that was presented in price, 5 minute PD array, 5 minute PD array, 30-second confirmation, 5 minute PD array, 30-second confirmation. I gave my confirmation timeframes out for free. I'm also going to release it for free really soon. I'm working on a document. I'm working on a little entry checklist for y'all. I'm going to make that available really soon, where it gives you all the confirmation timeframes that we use. So for the 5 minute PD array, you got a 30-second confirmation. This is an example of how it will be used. And you see with that 30-second confirmation, how it could have got you a move like this, where we're up tons and tons of points. You're just gonna have to do the math on it. It's about 140 points so far, just breaking down. So pretty easy trade to see. All right, so when I'm riding like a trade that is kind of moving in one direction for a very long time, I'm always watching the nearest PD arrays. I give it 1 or 2 PD arrays to violate before I get out of my trade. So what I mean by that is, if I was holding this trade, because I don't want to watch price retrace aggressively before going lower again, because I could always get back in, I want to maximize and lock in profit. So I will always watch the nearest PD array. So for example, there's a 1 minute bearish trade value gap right here. If we invalidate this, I would take one off. So we just invalidated it, right? So I'm gonna go ahead and take one off real quick. I'm gonna go ahead and take one off. We were in 2 sells, so I need to buy one back. Cool. Now I'm only in 1 trade. If we were to invalidate 2 PD arrays, I'm gonna take them both off. So for example, we got the bearish trade value gap I highlighted. I took one off because we went above that. I'm looking at this green candle, because during aggressive downtrends, green candles tend to hold as resistance. You don't believe me? Look at what's going on right now. Look at this green candle. It held as resistance. Look at this green candle. It held as resistance. You see this wick came up into that candle, held as resistance. Look at this green candle. It held as resistance. See, we came up into it, rejected. All right, cool. So this is the next green candle in question. So if we were to invalidate that, I'd probably say, you know what, let me cut my runner. It's holding us so far. All right, we made a lower low. That's beautiful. So now I'm gonna do the same thing. I'll do the same thing right here. Hopefully we can make a fair value up. That'll be even better. Even better. Now this is my PD array that I'm using to hold this trade with my runner. Hopefully y'all learning something. Hopefully y'all catch my drift. That's how when you catch trades like these, we're just aggressively moving your direction. This is how you can maximize. I'm not selling based on money or panicking. It's based on price action. It's based on the validation or invalidation of PD rates. I mean, people always ask, yo, how do you hold trades? This is how you hold trades. This is how you hold trades. All right, so we come into a PD rate right here. Ideally, if we're bearish, we should reject the lower half of that. If we don't reject the lower half, it's very likely that we're gonna come into these wicks. I don't want to be a part of that, so I'm watching this. All right, we invalidated it. We came into those wicks off the rip. All right, so this is not good. But because I'm in just one runner, let's see if it could actually still reject this green candle in totality. This is the last line of defense. Other than that, I will cut the trade. Other than that, I would cut the trade, y'all. Look, it brought us to a new low. You see what I'm talking about with them candles, man? Inverted fair value. This would be if we would have used it on the other side, but we didn't. Also, I wouldn't be looking for inversion. Oh, maybe you're talking about the red one, but still, I wouldn't be looking for an inversion right now anyways. I would only look for inversions after objectives have been met. We did not meet an objective, so therefore I don't look at inversions. In other words, I'm not necessarily looking to get validation on upside until I feel like we met an objective. So understanding market objectives is important, and it helps people understand when they should be looking for PD arrays on the other side of price action. Right now, like I said, we're bearish until we hit purple. The reason why I'm looking to get out the trade potentially is because we could retrace all the way up here before hitting purple. So I don't want to be a part of that. I don't got time for that. I don't no, I want to maximize. I could just literally get back in, bro. I just get back in. So that's how I look at it. All right, so that green candle is really doing damage right now. Shout out to that green candle. It's still holding price. So yeah, seeing what real price delivery look like. All right. So yeah, this momentum here is kind of showing me probably gonna move past it, but we'll see. We gotta wait. Right now, it's technically still holding it. I'm weak. This is the strongest green candle of all time. That's mad funny. Wow. Shout out this little guy right here, man. He doing his thing. He doing his thing. That's what we like to see. That's what we like to see. He's still in the trade, y'all. Breaking down some more. Okay. All right. So what I would look at here is what I look at here is this premium SIBI. I look at this premium SIBI in this scenario right here. Why? Because we made a lower low right now with a fair value gap in that price leg. So invalidating this fair value gap is telling me that we probably gonna make a higher high. Plus, we have a whole liquidity build up right here. Look how they made all these clean highs. I feel like price will target that. So if it make it past this fair value gap, price will probably target that. I don't want to be a part of it. So like for me, I'm gonna go ahead and move my stop loss down to about right there. Move my stop loss down to move it down to about right here. All right. Yeah, I was probably like, yo, where's stop loss at? Yeah, my fault. I was mentally doing it. But here we are. So let's see what's up. Okay, we still pushing lower. I take it. Pushing back up. This is still my line of defense because this is all still a part of this price leg. We haven't done anything. We haven't made no new fair value. We're just still a part of that price leg. But this is still the fair value gap that is important right now regarding short-term sentiment. We just chopping right here. What is it? Probably lunchtime, not even things. Got real choppy in this time period. Once again, I was traveling during this time. This is what I was dealing with. Honestly, I mean, this hasn't been a bad like drop. I looked at this briefly. The only thing I looked at when I was prepping here really is like I said, that 5-minute first fair value. I was like, oh, this was probably a nice setup. But largely, like I'm kind of doing this with y'all right now. I'm actually showing you guys how I would legitimately hold a trade if I was trading this on the 1 minute like this. This is literally what I would be looking at. And then once again, this fair value gap is what I'm looking at right now. But this has been it got really choppy in this area. Hopefully I ain't blow no accounts over here. Man. Let's see. Here it come. Flash candle, boom. All right, so yeah, I feel that because that got invalidated, we're gonna run these highs. That would be my expectation. Will it happen? We will see. But that's why I would get out the trade here. This premium fair value gap, we should not invalidate that, because if we do invalidate that, we may run these highs. And when we run these highs, it might be a decent liquid push up. All right. So 11:30. Maybe not. Guess not. So maybe I just got out early. My bad, y'all. But that's what I would have expected. So, oh well, that's life, right? We made a lower low, looking to come into the purple. So let's say you got out your trade early like me. Like this is what I would do in real life here. If I got my trade early, I'm watching order flow again. So right now, I definitely don't want price to come back into, definitely not this top fair value gap. Definitely not the top fair value gap, right? This is a fair value gap. I want to make a lower low. As we make this low, I want us to hold it. I don't want us to like lose this and then come back into this range, because then I'll probably cut my trade. Oh, we probably in chop. So what I may do here is And I wish I seen this earlier. I was moving kind of fast. I would have took an entry right here. This was a good fair value gap for these lows. This would have been a perfect entry, but now I'm about to enter late. So something that is very key here on risk management or emotional management is if price is still going your direction and you just sold your trade, you're like, oh my gosh, yes, you happy because you made money, but you're like, yo, I know it got more to bleed. Like price is bleeding right now. I need more. I need more. Cut your position size in half, minimum half. Cut it by 75% if you need. Cut it. You need to re-enter with small size because if you re-enter this trade and it's a loss, please don't give all your gains back. So being that I only took 2 contracts to start with, I could only re-enter with 1, or don't ever get it twisted. I could just go to micros, right? I just go to micros. So I notice I'm on the minis right now. If you're familiar with futures, on futures, there's 2 different ways you could trade the NASDAQ. You could trade it with minis, which is where you make like a lot faster money because more leverage, or you can trade it with micros, which is a lot less leverage. Like minis, every point gets you $20. With the micros, every point that the ticket moves only gets you $2. So there's a huge difference between making $20 per point and $2 per point. So my point right now, my point is that if you're going to re-enter a trade after having a whole green day, look, we're super green today, right? Big money being made. Okay, please re-enter with at least half the size. Don't re-enter with full size, please. All right. So this is with 1 minute. I got to only re-enter with 1. And because I'm re-entering with 1, that also gives me a bit of room for a bigger stop loss. And so, like I said, I do want to see this fair value gap still holding price action, even if we come back to it. I don't really want to see price come into a premium of this range. So I'm looking for price to enter to come to this purple area minimum, and let's see how it goes. Right now, this fair value gap is extremely important. So my stop loss is definitely, I'm only in 1. Okay, I'm thinking out loud. I'm trying to give you guys all my thoughts. So sorry if it sounds like I'm like stuttering. It's because I'm trying to say all my thoughts. My mind be going a million miles a minute when I'm trading. So look, what I'm saying here is this fair value gap is extremely important right here to take us lower. This is the one that's supposed to take us lower if we're trending bearish. If we were to come into this one, I already could tell I'm probably wrong, but I could still hold for this one. Just stop loss wise, like risk to reward wise, like I could technically hold for this one. But like, to be honest, I know I'm wrong largely if this doesn't work. Or I'm gonna be dealing with maybe some choppy price action before we break back down. Notice I said before we break back down because the higher time frame already told me we're going to this purple area. I already know that. My mentees also already know that. It's not just me. This is exactly what we learn, and we see it play out every single day on every time frame. Once we lost that purple area way up here, we knew we would come to this purple area way down here. So any consolidations, look at this consolidation. Any consolidation, we know by the end of that story, it's gonna send us to the downward direction. And that takes a lot of stress out of your trading, because if you're trading consolidation, you be wondering like, yo, it could go either way right now. Depends how you look at it. Because if you knew from a higher time frame that it was gonna head to the downward direction, anytime you see this happen, even if it goes up first, it's gonna trade right back down really aggressively like that. A lot less stressful. Okay, so I'm only in 1. That's why I'm holding for this. But if I was in 2 contracts, if we invalidated this fair value gap, I would trim 1, meaning I would de-risk. I'm not gonna hold both of them for these 2 stop losses. I would take 1 off here and hold a runner for the 1 on top. I hope y'all understand what I'm trying to say. We could reject here. If we don't reject that, I would de-risk my position. All right. We want bodies to hold it, by the way. As you may know, you've heard us talk about fair value gaps. It's all about bodies holding this area. All right, cool. So I would if I was in 2 contracts, once again, I would de-risk because I wouldn't want to see this one get invalidated. That's the whole point. All right, now let's see if we're gonna get stopped out on this one. Do you move your stop or wait for candle close? If you're talking about this one, for me, my stop loss on fair value gaps, my stop loss on a fair value gap would have been, let me put a yellow line for you so you'll see. It would have been right here. That's what my stop loss to a fair value gap would have been. Right where that yellow line is at, which is the opening of this candle. All right. So that's where my stop would have been at. I don't want to see you go past there. Now let's see if once again this fair value could continue to hold us or not. All right, so we breaking down. So cool, this fair value gap held us. So if I was in two, once again, I would have de-risked at the first one. Cool, lost a little bit of money. But then the runner, quote unquote, would have been still valid because once again, to me, this fair value gap was still valid. I know we're bearish as long as we stay below here. If we were to come into here, I'd be like, that's a reversal. That's a reversal. We don't want these to get traded back to. I could say that much. So this area was a little bit tricky. As you see, I was expecting this one, but price went to the top one. Thank God we was only in one contract. That's why it's good to, if you already made money for the day, not go full size if you're just looking for some bonus profits. And I mean, it's clear as day where we're going now, to be honest with you. But I would say similar to what I was telling you guys about leaving a range. You see this green candle, right? That green candle, once again, I want that green candle to hold as resistance, ideally. Ideally. All right, ideally. So let's see if that can happen, or if we just go straight to the purple. I don't know. You could also talk about this fair value gap if you want to. Both of these, I would watch both of those areas. Something that could hold us. All right, that fair value gap brought us to a new low, so it did its job. Now that it did its job, I don't really need to look at it no more. Looking to break down to purple, ideally. I just want to see where it is. Hold up. Cool. We still got this. I personally would go break even here because I don't want price to invalidate. Like let's say it's about to invalidate that fair value we were looking at. Let's say it invalidates that, which it hasn't yet, but let's say it does. This is my second line of defense. I don't want to see two PD rates get invalidated. No, I'm not doing that. Plus, I already made money for the day, so why would I lose money now for no reason? There's no need to do that. I'll go break even. Don't be greedy. Account management is more important than like, you know, freaking tripling your account in one day. Y'all should know that. It's all about risk management. So even as price consolidates here, do you guys know where price is going? Like, you see what I'm saying? Think about it. You don't panic. Like, even though price consolidates right here, you know where it's going to go eventually. How it gets there, it may flash up first, come back down. That's a possibility, or it will simply just break down immediately. That's a possibility. But the thing is, you know we're going to purple. So if you were in the trade from up top or something like that, you shouldn't even panic because you know what's about to happen. Price has to come to purple. Y'all don't understand, like, man, when you guys really get deep in the price action, you're gonna realize that price literally has to do certain things. Like, this is how the market was designed. It's not about buyers and sellers and news drivers and people, you know, whatever stepping in, buyer stepped in, seller stepped in, and all that foolishness that people be saying, respectfully, is coding. It's literally all coding. So the coding of the market is we have to come here, simply put. And so even though it's consolidating and all that stuff, you kind of know where price is going by the end of the story. So it's like, man, you got spoiler alert. Like, spoiler alert, we gonna have to go to purple. So yeah, it's going sideways, but it'll end up in your direction. You feel what I'm saying? So look, it played out exactly how I said. Even if it flashes up first, you know that it's gonna end up in your direction. So now it's like target hit. And mind you, look what it flashed up to. Right to that, let's make it exact. Let's go, let's see if it's really exact. The bottom of this green candle is 513.25. The top of this red candle is 513.25. To the exact tick, that green candle, to the exact tick is where it rejected and sent us back to the downside. So when I say we picked the best PD arrays, you see what I'm talking about? We know price like if we bearish, price has to reject that. That's why I said, yo, if we don't reject that, I don't want to be a part of that, because that tells me, oh, I'm probably wrong right now. I'm on the wrong side of the market. Cool. It got to reject that if we bearish, you know? And as y'all can tell, like, once again, I'm doing this live with y'all here on the 1 minute, you know? All I knew was that we had rejected the first 5 minute joint. I knew we rejected this and came down here, but I wanted to trade the 1 minute with you guys. So that was like low-key fun for me as well. But those are like, I was trying to speak out my exact thought process on what I would do to hold the trade. That's what I do. So yeah, I mean, and then once you get here, like, what's next? So let's talk about that. You know, let's talk about that. And there's definitely a time element involved in this trade right here. Absolutely. So if I was gonna hold this trade right now, I don't want this fair value to get traded back to. So for me personally, my stop loss is scaling down all the way to, like, I'll put it right here just in case it wants to take it. But I literally do not want price come back to that fair value. We need to break down right now. If we're bearish, we need to continue to break down. Why is that? Why do I say that? Right. So we already ran out the buy stops here. Now we just ran out the sell stops. There's no need to leave a consolidation and come back inside of it. I don't want us coming back inside of it, especially if we just touched a 4-hour bullish PD rate. 4-hour bullish PD rate. Nah, miss me with that, bro. We should not come back to the consolidation. And so that's why I put my stop right where the consolidation is at. We need to just continue to break down. Otherwise, I'm good on this play. See, coming back in, not a good sign. Just not a good sign. Y'all can have that, right? And then so I would take it right there, but I'm done. I'm done off of that. Whatever happens after that, they can miss me with it. Expectations wise, being that this is Friday afternoon now, Friday afternoon, we just met the objective. We had a huge drop off, clearly a huge drop off on Friday. You think I'm expecting price to have a V-shaped reversal on a Friday and go up here again? Heck no. This is where I say, hey, I'm gonna sit tight because they probably gonna chop up for the rest of the day because the objective just got hit. And so lo and behold, this is what ended up transpiring here. My fault. This is what's going on right now. Friday ended right here. Friday ended right here. So we literally chopped in this little area right here for the rest of the day. What you see on the screen right now is actually what's going on in the past hour and a half. So clearly, first of all, the 50% of this 4-hour area is still setting price to the upside. But cool. Did you guys get a lot out of that? I know I didn't said a lot. Hopefully I got some value from today's breakdown. Can I get some feedback in the chat if y'all got anything from today's breakdown? That's what's up. That's what's up. I appreciate y'all. I'm glad that y'all getting value from it. A lot of fires in the chat. Everything. Appreciate you, Bridget. Mom, Robert, everybody. That's what's up. That's what's up. So let's keep it going. Let's keep it going. All right. So what was I saying? Next part of class, right? Let's erase all of this. Oh, thank you, chart debates. Hi, Tiffany said it, chart debate. Hold on, let me get back to the chart debate. I know y'all gonna take my head off if I don't reveal the answer. I'm bugging. I gotta remember the chart debate. All right, so let me pause my screen. Let me put my screen, pull the chart debate, and get everybody activated. Hold on. Where the chart debate channel at? Okay. So we here. In fact, now I see the responses. Look. Okay, look at people answering right now. Okay, so we got 19 people saying line 2, and we got 15 people saying line 1. All right, you see 16 people saying line 1. The answers is coming in. chart debate chat. So let's show it first. So this is the weekly chart. This is what it look like on the weekly. And the question is, which line will get hit first? Are we gonna go to line 1 first, or are we gonna go to line 2 first? This is the daily view of that same question. Same chart, different time frame, right? This is the daily chart. This is what it look like. Copy. Cool. So what is the actual answer? The actual answer is it's getting cold outside. Gotta drink a little bit, drink a little water. Y'all like drinking? What's your favorite drink? Y'all like to drink water, juice, soda? What are we doing? Oh my God, water. That's what's up, Simone. Me too. Trying to get more into water and stuff. I feel like we should have a whole discussion on just like water and health. And so we get to chart debates later or something like that. I don't know. Aloe water, I'm not familiar. David said orange juice over apple. David, you're gonna get kicked out, my brother. Water, coffee, and beer. Beer is crazy. I know, right? They help to distract me. Dramatic, just like a Leo. That's crazy. I'm not dramatic. How that switch from line 1 to water? All right, look. I got you. I'm about to tell you the answer. Because people, I think I'm about to start getting death threats in my freaking email if I don't tell y'all the answer right now. All right, so the answer is bro said he drinking gin. I'm crying. The answer is line 1, people. Line 1 ski. Hold on, who changed the answer? Hold on. Let me catch them in. Look at this, 1918. Don't start moving this number. You're gonna start moving. You're gonna see this go 18, 17, 16, 15. Don't try to change sides now. We watch you. But it's a pretty even split. So I know I picked a good chart debate when it's an even split like that. Yeah. That's just so line 1 was the answer, my people. Shout out to the people who got this one right. Yeah, this one was not easy though. This one was not easy. I would say to follow the strength of the market, and true reversals don't typically look like this. So that's the easiest way I could explain this one right now. The strength of the market, you see the gap right here in the discount. On a higher time frame, this is probably an OB as well. You got the gap here in discount. Yeah, I mean, matter of fact, I'm tweaking like I ain't show y'all the weekly. Look at the weekly here. You got this busy and discount. This is where the true strength is at. Look at the downtrend. There's no inefficiencies here on the weekly or nothing. This ain't what it look like. So price traded down to bring health to this area, to bring efficiency to this inefficiency. We're going back to line 1. If it was a true reversal, it would not look like this. It's very unlikely that it would look like that. All right, so yeah. That's how that go, man. That's how that go. All right, let's get to the next part of class. I'm still probably gonna get death threats in my email, but lay y'all for free. Copy Anjane. Copy that. All right, so let's go. Where next? Where to next? On here. Y'all thought I was gonna do price action without checking the weather first? Come on now. Let's check the weather, people. Let's check the weather. Joy is Anjane, Brianna. That's who Anjane is. She right there, right above you in the chat. But all right, let's check the weather right quick. So, what I mean by the weather? Before you trade, you need to know the best days to trade. How you know the best days to trade? Come to the economic calendar. It typically tells you that. The thing about this week is there's no real major news drivers. There's no CPI. There's no NFP. There's no FOMC. You know, none of those major things that can move the market aggressively, they're not going on this week. So sometimes you can see that as, all right, price action could move pretty smoothly. We got the sentiment we needed. You know, the past couple of weeks, some major things have happened. We got election results. We got CPI that came out, everything. So maybe the market has a reason to move in one given direction, or that could lead into some chop. You feel me? And so that could lead into some chop. And so I don't know. All right, never mind. Let me not get distracted. Okay, so Right here, you see that it's all these Fed speakers. There's a lot of Fed speakers speaking every day. A whole lot of Fed speakers. That's usually choppy days, man. So I want us to be careful. And also, I want us to be careful heading into the end of the year because, yeah, a lot of years, the end of the year is not really good price action. Sometimes it's one directional, but it might be one directional in a choppy manner. But ultimately, just the volatility really starts to die down at the end of the year. And Q said Nvidia's earnings is Wednesday, so it's not on the economic calendar. But Nvidia's earnings being on Wednesday is a big deal. Nvidia's earnings definitely be moving the market. So thank you for letting me know that. So I would say the second half of the week, meaning Thursday into Friday, we might see some direction. Monday, Tuesday, Wednesday, I will be careful. And once again, just for the rest of the year, I'll be careful. So with that being said, let's also bring some context of why we might be careful. Can we take a second? Like we coming to the end of the year, so I feel like it's only right that we recap what the heck we just called out on DXY, bro, all year since y'all been tapping it with me. Like coming back from here, calling rallies higher. We called rallies higher into this area. Now, then we talked about price rejecting right here at the highest body on the weekly chart. Let's show you that. Let's show you that. You see this weekly swing point? Notice where I put the yellow line at the highest body on that swing point. Look how we rejected it to the tick. That's something we called out beforehand. Everything I'm about to talk about is something we called out way before it happened. We rejected it. We talked about price rejecting this fair value gap. We talked about price rejecting this fair value gap. We talked about price coming to this liquidity down here. Boom, target hit. Anytime a target gets hit, you need to wait for more context. Objective is hit. Another objective that's hit is price coming to this 1 month BISI. Monthly BISI, what you mean? Look, go to the monthly chart. Follow me, y'all, follow me. Monthly chart. This monthly bullish fair value gap right here has been holding DXY up for like 70 years at this point. This is going back to like January 2023. We've been getting held up on this. And we also held up on a monthly bearish fair value gap. They're both prices consolidating in between the two. So when we call this whole drop, every week we come in here saying, yo, DXY is going to do this. It's going to do this. It's going to do this. We've been accurate every single week for months, bro. For literal months. We came down here. We said, all right, we're in the spot that we typically bounce from. We also just ran sell side liquidity, which means these lows right here, we came under it. We consolidated. Once price popped out, what we said, oh, DXY about to rally crazy. We talked about price not coming back to this fair value gap down here. We said we don't want to see price come back here. Price rallied off this. We talked about this weekly BISI sending us higher. And then that brings us to last week. Last week's plan. I'm on the hourly now. Last week's plan. In class, and prices down here, I said DXY should be using this to take us to minimum, the yellow line up here, minimum. So if anybody is trading any dollar pairs, you already have a direction. You know that the dollar is gonna be moving higher. And it went straight there. That was last week. And then I didn't like update you guys or nothing like that because we meet on Sundays. And I didn't put it in my morning analysis. But after that, it just gets pretty clear. If we move past these highs, we're gonna come here. And if we come in here, then we're coming to this month, these wicks right here. We're coming to these wicks. So far we came to the 50% of those wicks and we're trading back down. So what's next? What is next? We are officially at an objective. I just gave you the whole breakdown going back months and months and months up until this point. We just ran crazy. I'm on the 4 hour. Look at the 4 hour, bro. We just ran crazy on DXY from the monthly BISI all the way to the monthly SIBI up top. And then now we're consolidating. So do you think we make the journey back to the downside now? Is this next? Because we've been bouncing back and forth for like 2 years now. So at this point, I don't know. My personal prediction, I think we're going to continue higher. I think this is the time we're going to really continue to break to the upside some more. But largely, it will depend to me on this daily BISI. I want to see if this daily BISI, we already tapped into it technically. So let's be clear, we already touched it. But even if we touch it again, yes or no, I'm still trying to see if it could take us past these highs. And if we run past these highs, we're probably going to start a deeper journey, largely probably into this fair value gap up here, minimum. So we're gonna see what's next on DXY. But I would say sit tight, don't force the issue. There's no real news drivers that typically moves the dollar this week, so the dollar could 100% consolidate in here all week. Do not be surprised if the dollar consolidates here all week, y'all. All right. So I would say Forex has given you a lot of fire plays. The past, like you got in Forex, y'all take has been moving over there in the Forex side. They've been moving. Now that we got to this destination on the dollar, objective got met. We're waiting for more information. We will watch this fair value gap, but I will not be eager. I need you to be patient. Do not be eager. All right. Now, another thing we look at is the two-year bond. I've been, once again, y'all already know, if you've been with me, we've been charting it accurately every single retracement since down here. Every single dip you see, we called out where it would bounce from, every dip. And when prices up here, we said it's going to have a big drop. Big drop came, now we back to the lows. So same thing, it's like, okay, we pretty much back to square one. What's next? I think that the 2-year is going to continue lower to run these lows that it put in back in June. I think it's going to run those. But for right now, especially with no news drivers in the market, it'll probably continue to consolidate here for the rest of the week. I wouldn't be surprised. So my expectations on the dollar and the 2-year are very low this week. I think the dollar will move higher. I think the 2-year will move lower. This week, though, I don't know about all that. I don't know about this week. So be careful. You see the euro met its destination. So last week's plan on the euro. What was it? In class, price is right here in class. I said, yo, I think it's going to use the lower half. We're very specific. The lower half of this 4-hour city was the plan last week to take us much lower. We got to all our objectives, and now we consolidated. Monthly lowest body. Let's look at it. You see this monthly swing point? That was a target right there. After that, we don't have to run under this wick. I just made a reel about this on Instagram as well. We don't have to run under this wick. Price could absolutely retrace from here. So I would be careful on euro. And I'm not saying it won't eventually do it, but it may, let's say, come into this SIBI first before doing it. So it's just like, I would be careful of any retracements happening right about now. All right. So one thing I'll watch first is just this SIBI. If price come into the SIBI and we can reject it again, or the rejection it did already is probably good enough. But my point is, I'm bearish on it under this SIBI. After this SIBI, then it's very likely that it's going to come into this one up here. So if it's not this SIBI, then I would see euro pushing up higher into this area, okay? So for euro, I'm bearish under here. After that, I'm assuming we're going to be retracing into there. But largely, once again, Forex expectations are very low this week. British pound. I told you guys I'm very bearish on British pound. I said the movement, though, I wasn't liking the movement. Last week was fire, though. So this is what we looked at heading into the watch list. So I told you guys I don't want to trade it, but it was actually a fire week. So it went in our direction, but I didn't think it would be actually trending. It actually trended last week, so that's what's up. And now that we got to the destination, same advice that I gave regarding DXY and euro. This one went really well as well. We've been vocal about this weekly SIBI taking us lower to these lows, so we finally got to that destination. I would say if you're trading Forex as well, I would look at this SIBI to take us lower. If this SIBI doesn't take us lower, we're probably gonna have a deeper retracement up into here. And so we're watching this SIBI as well on New Zealand. So if you trade New Zealand, I'll watch this SIBI to take us lower. If not, you're probably looking at a deeper retracement. CAD, USD CAD. Another one, bro. Another one we've been sniping crazy every single week from this rally to this sweep. Then we were trying to see if we would reject here. We did not reject here. So this is something we were looking for that did not happen. We were, I want to say wrong about it. We were looking for it though. It didn't happen. And we consolidated. Once this fair value gap came out, we said, oh yeah, this is going to remain open and we about to rally crazy. And ever since then, we've been up. It's been up and stuck, bro. It's been up and stuck. We got to this destination here. has been looking beautiful. Look at it on the future side. I should look at it on the future side. I really should. I really should. This is a huge wick here on the monthly. We want to see if price may want to trade into the 50% of that. But what I would do is, actually, never mind. I'm not gonna say that part. I gotta hold certain things for mentees. I'm gonna be real. But what I will do though is still watch nearby PD rates. At least I'll tell y'all that. Like, for more upside, of course, we want to see if this can continue to hold. If it doesn't hold, it's very likely that we're gonna come. I will watch both of these fair value gaps, to be honest. I'll watch this one and this one. If neither of these work, we're coming back to these lows. If neither of these fair value gaps work, we are coming back to those lows. So that's that. But ultimately, my real advice on Forex is just be careful this week. I don't expect much on Forex. We almost done with Forex. I got 2 more tickers. On USD CHF, I expect this ticker to continue to move higher. We are bullish on this as well. Look at the lowest body. If you're a non-believer on the lowest body concept, yeah, I see it playing out right here as well. Notice we didn't come to these wicks. Price stop right here at the lowest body. Look how we pushing up hard. Cool. I expect this to continue that push. Minor target is this SIBI here from May 30th. I think price will go there next. But make sure that bullish PD rates are holding. So for example, I wouldn't want price invalidating this red candle. As long as we stay above this red candle, I believe in this blue target. And so anything that's bullish, like let's say you start seeing bullish fair value gaps and stuff, I would trust those. I would trust that they'll work to take you into that blue area minimum. After that, we'll go higher, but I'll update you guys when it comes. And last but not least on Forex is the play that we talked about together. We pretty much on the watch list last week, literally in class, price was in here. And I was like, yo, no, price is right here. I was like, I don't want price to come back to that 1 hour busy. And if it doesn't come back to that 1 hour busy, then we're going back to these highs easily. And that's coming over this 4 hour bullish OB. Beautiful bullish OB. It reacted exactly where we wanted to react from. People that were in my order blocks masterclass know that the stop loss isn't, oh, if we come under this candle. And so you think the stop loss is this wide, but it's really not. The stop loss is not this wide. I talk about the exact spots where you want price to react in your OB. So even though I highlighted the whole area, that's because I do this for real in the sense that the order block by definition would be the consecutive red candles by definition. That's why I highlight that. My reaction in this scenario, I wanted it to be right where it was at. And no, it's not simply about it being above the 50%. So people are like, oh, it's the 50%. It's the mean threshold thing. No, that's not what I'm talking about. Anyways, we pushed, we ran these highs, and so it was a beautiful play. So anybody that actually took this play last week really made some solid money. So shout out y'all. Now going forward on USD JPY, going forward on them, this BISI has to take us higher. Otherwise, it's likely going to come back into these lows. So I need the daily bodies to hold this. Daily bodies need to hold this right here. That's why I drew it. This is very important for price moving higher. And I think it will move higher. I think it will, but we'll see. All right, quickly speak about crypto quickly. So, man, crypto, what a journey. So let's go back, man. Let's really go back on crypto for a quick second, and then we're gonna get back to futures right after that / options. So, man, yo, look, you see how these are the previous all-time highs. Okay, we slightly ran above it. This fair value gap becomes extremely important. So the plan on crypto all year, literally, because this formed back in March, the plan on crypto all year was as long as weekly bodies hold this BISI on the weekly chart, crypto is 125,000% gonna run higher into, I had a 95 target, 95,760 minimum. And then if it makes it past that in a certain manner, then I would target 122, 520. That's been the plan. So, man, crypto gave us so many heartaches all year. I'm like, yo, me and myself, like, I was like, yo, guys, I think crypto might start to drop off. I'm starting to like, I know we talked about the BISI, but I don't think the BISI is gonna work because it consolidated for a whole year. So I'm like, yo, it's probably not gonna work. But all my friends that ask me about, yo, should I sell my Bitcoin? Should I always tell them, yo, as long as we holding that BISI, I can't tell y'all to sell that thing because as long as the BISI is holding, I'm holding. And so lo and behold, I mean, it held. It held. And so we pushed out of there. Now, last week we said, yo, we want this BISI to remain open. It remained open. Beautiful, beautiful. That's how you know we had intent on running higher. Cool. And we're obviously at all-time highs. So, you know, I have all-time high targets up here. Will we get there? I don't know anymore. And I'm gonna explain why when we get to NASDAQ. We're gonna have to see. But crypto and the whole market is at a very critical position. And we need to talk about that. We really need to talk about that. I'm a perfectionist. So when I make all-time high targets, I like to see them get hit. They typically get hit. And I've done this on so many tickers. We've all seen it all year. I've done it on so many tickers. So seeing it come here to 93,500 and just miss my 95, it bothers me. And that makes me also feel like, yo, it's probably gonna actually hit my target. But then the NASDAQ, everybody, the NASDAQ is kind of annoying me because the NASDAQ did something that I didn't think it was actually gonna do just yet. I thought we were gonna drop off after the election, but I didn't think it was gonna happen just yet. So here's my point in bringing all of that up. If we maintain this bullish sentiment, how we've been maintaining it, then cool. You know, of course, I have my targets. I've been gave y'all my targets. I'm very interested in this BISI right here on the daily chart. This needs to take us higher. If it doesn't, crypto could get very bad. But the NASDAQ is making me feel that man, let's go there. Because they're not going to move in opposite directions. If the NASDAQ really starts to hit like a major drop off, a major correction or bear market, crypto is also going to drop off. They're not going to move in opposite directions. That's never happened in the history of crypto. They're going to move together. So let's get into the NASDAQ with that being said, so we can really understand this better. I don't need that no more. Let's talk a second. We already talked about this on the back test. We talked about this one on the back test. Okay, so NASDAQ, man, NASDAQ. So far, the area that we targeted using the BT4 process is allowing price to bounce. Cool. For me on the NASDAQ, I really would like to see 4-hour bodies reject this area. If it doesn't reject this area, NASDAQ certainly has potential to continue its upside journey. But to me, what will probably happen is it's going to end up consolidating in here. I don't think that it's going to actually make a higher high necessarily. Unless the energy is amazing, I could always switch that statement. But right now, I think that there's only 2 possibilities for the market right now that I could see. I think that the possibilities is we reject this area right now and come down much lower, or we do something like this, just kind of play around here until the year ends. Wouldn't be surprised at all. Staying in the general area until the year ends. At all. Would not be surprised. Yeah, that would be super frustrating. I'll be extremely, extremely disappointed if that happened, but I wouldn't be surprised. Now, let me explain my thoughts. You guys know the prediction, but let me explain why I say that. So, okay, so let's check out the daily chart. You have these previous all-time highs. We choppily moved there. This is what we call engineering liquidity. This is all liquidity. This is, look at liquidity like candy in the market. And the market makers are like some rotten teeth, cavities, striking rotten kids that just love candy. They love candy. Market makers love to target liquidity. If you got liquidity, they're gonna take that from you. They're gonna take that. So like there's a whole lot of liquidity all across here. So yeah, eventually they'll come back for that. When will they come for that? We got to see when they want to come for that. So that's one thing that makes me say that, yo, there's definitely potential that we can start a big drop off because there's a whole lot of liquidity right there. But once we made it past these highs, I said, okay, that's cool. We might stay above those highs and make a higher high in the market. But what would have to happen is we need to hold this daily this daily fair value gap. This fair value gap is extremely important for higher prices. This one, not this one. This one on top is, not the one on the bottom, okay? So that's why inside of here, I'm looking at inefficiencies, and I say, oh, well, there's an hourly, beautiful hourly inefficiency in the middle of that. And so now you guys know why I said the hourly BISI was the one that I was interested in the most. And that's why I didn't believe in any of these bounces until we touch this area. Once we touch this area, I'm like, okay, now we have a potential to move higher. We caught a nice, me and the mentees caught a nice trade on this rally here. Nice trade there. But then price ended up breaking back down. Now we broke down and we come to the area we talked about on the back test side of the class. All right. So why the heck would price have to come down here just to come back up here? That's ridiculous. That's not real bullish price delivery. And that tells me that the market is still in the engineering stage. And so to me, that's not an uptrend I want to be a part of. And I want you to picture it like this. If you were holding calls or trading this or something, and price can't seem to find a consistent rally every 5 seconds, it's either chopping, dropping hard. These type of uptrends, people, after we just traded into a deep discount, is not typical of bullish price delivery. That means that they're setting you up. They're setting you up for a huge drop. When will that drop happen? It might not be till January. Maybe it'll happen this week. I don't know. But my point is, the upside, I don't believe in upside much longer. I think they're setting us up for something major. Once again, I know this is the contract chart on futures, so it looks really weird over here. Maybe it's better that I just show you on this ticker instead. So look, notice that once again, we've been in a bull market, we're in an uptrend. Price traded down into a deep discount. On the way back up, it needs to be quick and aggressive. We don't want the way back up to look like this. That's usually an early indication of something like that about to occur. So now you guys catch my drift on why I say for the NASDAQ, this journey back up is super suspect. And the candle we got on Friday was promising. But based on time and me saying, okay, it's just mid-November, do they really want to tank the market just yet? I didn't think it would happen just yet. So that's why I say we may come down to the area we targeted on Friday, which is at 4-hour BISI, and this may cause us to make a higher high, but I don't want to be a part of it. It's either going to make a stagger higher high or we're just going to chop in the middle. But either way, that's why I say I would be careful of this entire area. I'll be careful of this whole area, people. Whole thing. It could be really low probability price action, and I don't look forward to. Here's what I want to see. If we're bearish, we should be rejecting this city. We're really trading into the higher parts of it, so I hate to see that. I really hate to see that because I would love for us to drop off. I'm not really interested in the city above it personally. I'm not looking at that one. I would want this one to work, not the one above it. So I don't really care about this one on top. That's why I didn't draw it. I'm only looking at this one. One reason I say that, let me go back to it so I could draw it so you can see my point. Because I don't like to just say stuff. I want you to understand what I'm saying, why I'm saying what I'm saying. So look at the purple area I just drew. That is a 4-hour bearish fair value gap. Let's go to the daily now. Let's go to the daily. We're on the daily. All right. So can you visualize this with me real quick? Can y'all visualize this with me real quick? Do y'all have an imagination? That's how you see candles ahead of time. You have to picture scenarios ahead of time. Y'all ever heard about how people who play chess, they see things multiple moves ahead, like 5 moves ahead? This is chess, not checkers. This is chess, not checkers. So my point in saying that is, if Monday's candle, which is the candle you're looking at right now, because futures are open, but it's going to be a Monday candle. If Monday's candle ends up coming all the way up here to this fair value gap, even if it drops off and this becomes somewhat of a wick, right? A long wick. Do you realize that on the daily chart, you just gave yourself this very small fair value gap on the daily chart? I know I'm losing some people, But I know some people with me right now when I say this point. We're gonna leave this very small fair value gap up top here. That's not the type of fair value gap that you want to see at the beginning of a big drop in the market. And so being that if we're expecting a big drop in the market, you want this fair value to be very large and expansive, and you want this candle that just opened up to be a red candle. And ideally, you don't even want this fair value gap to get revisited when it forms. So right now, that's why I said Monday's candle. I wrote this in my channel this weekend too. I said we could have a big drop in the market, especially if Monday's candle is red. I only want Monday's candle to be red if it could reject this 4-hour SIBI right now and turn red. But if we come all the way up here somewhere, I already know what I'm looking at. If we come up there somewhere, we either gonna make a higher high, but it's gonna be an ugly move, or we just gonna chop somewhere in the middle. So being that it's already trading this high into the SIBI, I could already tell like we probably gonna have a trash price action in here, but we'll see. We'll see. I'm telling you right now though, I have my sell side liquidity levels drawn still because besides this one, because we're not done with this price action. They're just stalling. They're just stalling. That we're not done with that, bro. I stand by that. We're not done with this. But we'll see. So yeah, that's that. Same vibes for ES. So ES, I drew the same thing, same analysis, right? I won't want this to reject if we're gonna go lower. If it's not this, I'm not interested in upside, but like you could take those trades. I would be conservative on those trades though. I'm gonna be real. I'd be conservative on those trades. YM, same thing. You will want the upper half of this to hold if you're bullish. If we start coming to the lower half, let me not say this. Let me draw it. You want the upper half of this. Matter of fact, the upper 25% for real. You want price to stay on the highest parts of this type of inefficiency. Once it starts coming to the 50% or below, we're technically supposed to most likely be bearish. But I already told you what I said about what this year may look like. All right. The remainder of this year may look like. So a question in the chat says, question about fair value gaps. When I find a higher time frame SIBI or breaker structure, what you saying? Oh, BISI, okay. When I find a higher time frame SIBI or BISI, but it's efficient on the lower left. What do you mean by the lower left? Would you still use the higher time frame SIBI? Or would you possibly consider it? Oh, lower time frame. Okay. I feel like I see what you're saying. So let me rearrange it, and hopefully I'm answering your question. So basically, what the question in the chat is saying is, hey, say you see like a weekly SIBI like this, where you could draw, look, a BISI, my fault, y'all. Weekly BISI like this, which is a weekly bullish fair value gap. And it's clear on the weekly chart, but when you go to like, not that time frame, when you go to, I don't know, let's just say the 15-minute, that same area is like, oh, there's no fair value gaps. Like in that area, it looks like this, right? It's really choppy on the way up. That's what you're saying, right? Like, do you still consider this inefficiency? That's what you're trying to say. Will I still look at this to take us higher? Pretty much, right? So yes. So yes, I do. I still do. Yes. I prefer when they overlap, like there's inefficiency here as well, but I still look at that area because higher time frame is dominant. The high time frame is dominant. So this is a large inefficiency. So this whole time while we're in here, I'm looking for signs that we can move back to the upside. Even if when I go to the 4-hour chart or something, it's inefficient. I mean, it is efficient actually, but you can see even the 4-hour in this specific example has like large fair value gaps. So we definitely could bounce in this area using the Dow as an example, but I know what you meant, hypothetically speaking. And while we're on the Dow, let's also note that I gave you guys targets at these all-time highs on the Dow. This is the first target. This is the second target. Showing you once again, everybody, that we're not just picking these targets out the random. This market is pre-designed and it's coded. So notice what happened. We got to first target. Now you see a retracement. Do you think that's a coincidence? Look how the body stayed under that target and everything. That's not a coincidence. Now, once again, if we're going to move higher, it would ideally need to be like around right here. like that. If not, just be careful. We almost done. We almost done. Russell vibes, Russell vibes, Russell vibes. All right, the Russell, I ain't like this. This is what I did not like about the Russell. We were supposed to make a weekly bullish fair value gap leaving this consolidation. Do we like to leave consolidations without fair value gaps? That's a bad sign. How you leaving a consolidation? Look on the weekly chart. You're leaving a consolidation without a fair value gap. Now you go to the daily chart and you're like, oh, well, on the daily, we got like a huge fair value gap. Yeah. You see how it's getting traded through, right? I wouldn't want to see this. I wouldn't want to see this at all. That's not. So it's either we about to make a lower low. I would target the daily lowest body right here. I would target the daily. It's either about to do that or we'll get a chopping right here. Because when it comes to bullish delivery, this is not typical. Unless we met an objective. Did we meet an objective? No, we did not meet an objective. No, we didn't run those highs. We didn't trade into an efficiency that's highly probable. Nothing. Like, we didn't meet no objective for real. So this is just bad. This is usually a sign of a reversal. Plus we have these relatively equal lows here, everything, like usually a sign of a reversal. But the only reason I'm suspect on any reversals right now is due to the fact that the market is being manipulated to stay higher right now until probably January, but we'll see. The Nikkei, for the Nikkei to trade lower, we would have needed it to reject this 4-hour city I had drawn. You see how it traded past it? Since it traded past it, it's very likely that it's going to run these highs. So it's like an if-then statement for me. I would go to these highs next on the Nikkei. Since it ran past this SIBI, I drew this before class, obviously. So I would have wanted to see this for lower prices. It's always an if-then statement. If not this, then likely this. So I would just reposition all biases. And if I like the nature of it, like this is a nice trend right now, I would target those highs on the Nikkei. Always an if-then statement. Because if we were bearish, y'all, this SIBI would have done this if we were bearish. There's no need to come up here to come back down here. That's not typical. No need to do that. That's that. We almost done. CL, still not interested in CL. As long as we in here, I'm not interested. Gold. Every circle you see is something that we say gold will bounce or reject on. Every circle on the screen. So we talked about this rally, we talked about this bounce, this bounce, this bounce. We talked about this being the high that gold will get to. We talked about this rejection. And then we traded back down. Now we back all the way almost at square one. This is a beautiful market maker buy model to sell model right here. Almost at square one. We came back to this consolidation. Cool. Now what? For gold to continue lower, you will want to see this fair value gap right here in conjunction with this VI take you back lower. Not really looking for gold to come back into this SIBI. I want this to remain open until we get to the bottom of this consolidation. So my point in saying that is we want to see gold reject this to go lower. I don't want to see gold do this to go lower. I'm not saying it can't happen. It's just definitely not what we would want to see. This is more the expectation. If we trade back up this high, you really could see gold make a higher high. Like, don't be surprised to see it be an actual rally for real. All right, so I would just be careful on gold. Plus, if you look at the weekly, we would like to see a weekly SIBI, right? A weekly bearish fair value gap. So if you're gonna see a weekly bearish fair value gap, do you want price coming up here? Because you're eliminating the opportunity to make one. If you want price coming up this deep, the weekly chart is gonna have no ability to make a fair value. So that's what I mean by it's chess, not checkers, right? You got to think ahead of time, like, I want the weekly to make a bearish fair value gap. So that means the daily chart would probably have to reject on this daily bearish PD array right here if we would have run lower under the consolidation. If not, maybe it's not a real drop off. Maybe we about to make a high high. And so that's the thought process there. And pretty much last is SPY and QQQ. If we're truly bearish in the market, this gap should stay open and we should continue to drop lower. If we're bullish in the market, we'll probably trade back to that gap and make a higher high. And then SPY 611 remains in play. So a lot depends on if we come back to this gap or not. I don't really want to see us come back to this gap if we're truly bearish. If we're If we're not bearish, it's likely that we come back here and we push, of course. And it's the same thing for QQQ. They have a gap in that same spot, same sentiment. So you don't want price coming back here. If it does, we probably gonna run all-time highs. So that is those are the bull and bear cases all across the market right there. A lot to say, I know, but to my favorite ticker is the Nasdaq. So to be very precise, just to sum it up in like a few words, because I know I said a lot. I know I lost a lot of people because I know I got different experience levels with smart money in here. So let me try to say this as simple as possible. Like basically, right? This uptrend after price came into this deep discount, this big drop off, we've been trading to the upside, right? But the manner in which we're getting there shows us that, yo, price is not necessarily trying to go higher. So you're waiting for a big sell-off. It's gonna come, but when? That's the tough part. Timing it is the tough part, because they really could hold price in this disgusting type of uptrend until January or something like that before we actually have a huge sell-off. And so I like the fact that we ran this liquidity first. We swept it rather, and we pushed down hard on Friday. That was a little bit promising. Like, hey, maybe they starting to sell off now. You know, just a couple weeks after election, maybe they starting to sell off now. Cool. But if we're gonna start that sell-off for real, what you will want to see is, let me go back to the daily, my bad. You will want to see a large daily bearish fair value gap right here. Right where we're trying to make it right now. So when you come to today's price action that's currently forming, this candle just opened up 2 hours ago. You see it's already starting to trade a little too high. Like, I don't like how high it's going. And if it moves past the blue area, now we're going to be up here somewhere. And then that's only going to give you an opportunity to make a fair value gap this small. And yet it's at the beginning of a big bearish move. I don't like that. It makes me not believe that the bearish move is ready yet. And so that's why I said, for bearish sentiment, it had to be this civvy right here. It had to be this. Honestly, the lower half of it too, to be real with you. So even the way it's already trading is making me lose faith in maybe the sell-off is not ready yet. And then you see this drop right here. You see this drop right here. This drop. If we start trading back into this general area, you're probably gonna end up seeing price put in a new all-time high. So like, if anything, if we're gonna chop, I'd rather chop down here or something. But like, this is straight liquidity, bro. We might, at a point, maybe even before year end, we will breeze into the upside like that. So even if we chop at first, it has a chance of breezing to the upside when the time is right. But lo and behold, bro, I try to give y'all every case. It's obviously a tricky part of price action right now. But that's the way I see it, and that's my reasoning. And hopefully it was enough to bring out value. I would just be careful in this type of price action. Be careful, man. It's been a really tough second half of the year. That's what we've been dealing with, right? It's not easy. You got big sell-offs like these that are not even real sell-offs, most likely. And so I would just be careful. And even with that being said, it makes me feel like Bitcoin may actually continue higher, because this might not be the real sell-off just based on how price is trading right now. Like, this looks strong. It looks like it has the potential to continue higher. And once again, this is the only thing I wanted price to reject on if we're bearish, and it might not reject it. So it might not be bearish. Simple. All right. Great point. Actually, I'm gonna read this after the recording. Let me close the recording. So first of all, if you're watching this on YouTube, definitely go to the description box right now and join the free community. So you could join these Zooms, ask questions, engage, be a part of the community where there's daily updates, because y'all see me on Sundays, but I give updates every single day in the chat all across the market. And so definitely join up. There's a lot of fun and a great community to grow in. But subscribe to the channel, like the video. With that being said, that is all she wrote.